Welcome back, everybody. Here we have a EURUSD case study. So this is a trade that was taken yesterday. So the date recording is 16th of May. This trade was taken on the 15th of May. And this is a PPI trade, right? So post PPI, very important. You don't gamble news events. You trade the reaction afterwards. And here's a classic example of how you could do that. So what we have over here is we have the 4-hour time frame of the euro dollar. Again, what we have over here is we have bearish structure. So those who have seen my previous videos, I'm very big on this topic where it's about determining your overall bias. So if we quickly go over the overall bias determination right now, there's 4 main things we need when it comes to creating a bias, and I've said this in previous videos, right? So what we have is we have our market structure, or structure for short. We have our dealing range. We have the premium and discount arrays, and we have our fair value gaps, right? So these are the 4 pillars to success when it comes to determining a higher time frame bias, right? So from here we have our structure, right, marked out by this bearish break over here. So we have our bearish structure, right? So that's our first box ticked, right? Bearish structure. Now our dealing range consists of 2 regions, right? Sorry, consists of 2 points we need to deal with. We have a structural high up here, and we have a structural low down here, right? So we have a structural high and we have a structural low, and this here gives us our dealing range. So going on to the third point is our dealing range gives rise to a premium and discount simply by projecting the Fibonacci tool from the swing high down to the swing low, right? Very simple, right? We project the Fibonacci from the swing high down to the swing low, okay? So that's number 1, 2, and 3. So number 4 now, if we zoom into price, we'll notice how we have an equilibrium over here. So anything above the equilibrium automatically becomes the premium, okay? So what we have over here is we have a POI, right? We have 2 POIs in this region, right? We have one all the way up here, just like that. So if I label that in gray, this is a POI, and you have to ask yourself, why is it a POI? So I've been through this in a recent previous video as to why this is a POI, and also below why this is a POI. Now currently we've broken this lower down POI over here, but this trade over here was essentially targeting this POI. So you need to ask yourself, what makes these 2 POIs, right? So simply we need to understand we've built a bias using 4 of our main tools, right? So on the right of your screen are the 4 tools we're going to consider. So yes, our structure is bearish. Number 1, structure. Number 2, we understand our dealing range, therefore, is bearish. Now, with number 3, we understand that we've come from a discount, right? So we understand we were in a discount over here, and we have these premium POIs up here. So we have a narrative, right? The narrative of price was to go from a discount up to a premium, right? So this was our narrative, to go from a discount up to a premium. So our third rule to consider was the fact that we are going from premium to discount, right? So it's essentially the PD arrays, right, to premium. You are buying towards premium. And the fourth thing is that we're aiming for fair value gaps, right? So we understand that we have fair value gaps over here in this region, right? So we have a fair value gap over here, which I'm going to label in blue, sorry, I was going to say green. And we also have fair value gaps in this leg over here, right? So these are our inefficiencies or our fair value gaps, and we use these to determine a bias, right? So our job simply as ICT traders is to target premium fair value gaps in this case, because we're buying, right? If we were selling, we'd be targeting discounted fair value gaps, but we want to buy from discount to premium, targeting areas of inefficiency, right? So this is essentially how the trade was built, right, from the higher time frames, understanding what the bias and narrative was. So now if we head down to the 5-minute time frame, we're going to be going over an accumulation, manipulation, and distribution model post PPI, right? So what do we have over here? Right, so this here is, if I get rid of the 4-hour equilibrium, so this here is the trade in which was taken, right? So this is Tuesday the 14th of May. Okay, so again, what we have over here, if we begin to dissect our price action, right? Now, the first thing that should be applicable, or the first thing that should ring alarm bells to everyone when you see a day like this, is that we have a massive wick over here, which coincides to be the low of the day, right? This is not an accident, right? If you've done any kind of backtesting with ICT, you understand that news events such as CPI, so if I label this, This here is the ICT Judah swing, right? This is the ICT Judah swing, right? So the Judah swing will typically form during those high impact news events. If you have a high impact news event, right, your best bet is to understand and really put yourself in a position to trade with the mentality that the red folder news events will create the Judah swing, right? So the ICT Judah swing is essentially the manipulation phase, right? Ooh. And what we need to understand is that we have news events such as PPI, CPI, NFP, right? And you also have some of the other, the unemployment claims, etc., right? But these are the big three news events, right? And also FOMC as well, which I haven't considered, right? But that's more of a PM session, right? But especially in the New York AM session, right? Having PPI, CPI, and NFP are incredibly volatile news events, and they very typically form the ICT Judah swing or the low of the day, which is exactly what's happened now. So this here is the ICT Judah swing. This here is the ICT Judah swing, and you need to ask yourself, what is the purpose of this move? So let's start here with the Asian range, right? So what we see is we see an Asian range just over here. So the Asian range, and just after the Asian range, what we have is we have an accumulation phase over here, right? And just before the Asian range, we see price giving us an accumulation over here, right? So you need to understand that when you have a volatile news event, such as PPI in this case, PPI, CPI, NFP, when you have a volatile news event, right, we often see a buildup of liquidity prior to the manipulation phase taking place, right? So this particular price action, which I've highlighted here, represents the accumulation phase, right? So this is the accumulation. And the accumulation has a very simple task in the market, right? The accumulation phase engineers liquidity. And what we're looking for is we're looking for 2 points of liquidity, right? It's essentially the two types of liquidity there are on the market. So what we have over here is we have buy side liquidity in the first red line, and then we have, you guessed it, right? We have our sell side liquidity, or the Asian range low, as the second line. So what we understand is that we need to understand that price sweeps both the Asian high or the buy side liquidity first, not necessarily first, but we see a sweep of the Asian high over here. So when we see price heading higher, just like this, you have to ask yourself, what is price looking to achieve, right? So this is what we call buy side manipulation, or manipulation phase one. This occurs typically before the Judah swing, right? So this is a two-phase manipulation model, right? So this move over here is not an accident, right? When we go to PPI, right, people say, oh, they're news events, you can't predict them, you should trade them. I do agree you shouldn't trade them, but you should trade the reaction. And understanding what a news event does and allow the price action to allow that movement, to integrate into price is the best way to trade these high volatile news events. So again, what we have an accumulation over here, we know with the Asian range. We have a manipulation over here, which is this PPI news event. And now from here, we have a distribution. We've had a bullish break of structure over here. Now from here, you have to ask yourself, how can you enter this particular trade? So this is one of the entry models I use. Essentially, it is the ICT silver bullet, right? So if I quickly put the silver bullet timings on, we see that the silver bullet is essentially this red region over here, right? So again, the fair value gap was respected just over here. My entry was slightly above this. I believe it was around sort of this fair value gap over here. So again, what you can see is you can see a time-based fair value gap, which is one of the critical areas of ICT. I think my stop loss was fairly wide, actually. I had it down here somewhere, I believe. Again, screenshots will be available in this particular trade. And from here, we have a time-based fair value gap just over here. So I'm going to label this and bring this over to the side, right? So this is the AM session, silver bullet, right? ICT. And your silver bullet is from 10 a.m. to 11 a.m. Eastern Standard Time, right? Which is 3 p.m. to 4 p.m. UK time, right? London, where this video has been recorded, right? So from here, now that you've essentially found your model, right? You've had an accumulation over here, you've had a manipulation or a two-phase manipulation. Now we are involved in catching the distribution. How do we do that? So the question now becomes, where do we target as a trader, right? So quickly going back to the 4-hour time frame, what we understand is that we have two POIs over here, right? We have a POI up here and we have a POI down here. Now, from a pricing perspective, you need to understand that the price action moves from a discount to a premium. So yes, we have a premium POI over here, but we have a more premium POI up here. So let's get the Fibonacci tool again. This is the Fibonacci tool, right? And what we have is, yes, we have our equilibrium over here, but this is a more premium POI, right? So this is our overall target in the market. So I expect price, if you're watching this video before it gets there, I expect price to get up to at least 1.0932. That's my next overall target, 1.0932, right? So this is essentially where the trade was targeted. Again, partials were taken along the way. Partials depend on your overall system, right? How you take partials depends on you as a trader. But as you can see, this is sort of a swing intraday trade, which is, played out in our favor using the simple concept of accumulation, manipulation, and distribution.